Is Coinbase a buy or a sell? Let's get started with the model. This is a large cap company, 77 billion market cap. They're trading at 306 a share and they have 250 million shares outstanding. Coinbase is an online trading platform for buying, selling, transferring, and storing cryptocurrency. Founded in 2012, based in Wilmington, Delaware. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have a lot of free cash flow in 2021, 4 billion, then negative 1.6 billion in 2022, back to positive in 2023, up 77% in the trailing 12 months to 1.5 billion. So it's all over the place, their free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's a really similar trend. Positive 4 billion, negative 2.6 billion, a small positive, then up a lot in the trailing 12 months to 1.6 billion. Revenue is a sales for the company, and that was highest in 2021, down 59% into 2022, down a little bit in 2023, but it's up 69% in the trailing 12 months. Their numbers are all over the place. It doesn't make me feel warm and fuzzy inside. We estimated 4 years of future free cash flows. We also estimated a terminal value to all cash flows past year 4, that's 65 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $58 billion. We divide that by 250 million shares. And we get a calculated stock price of $231. They're trading at 306, so they're trading at a 32% premium. It's a sell according to the model. What do you think? Do you think it's a buy or sell? Let me know in the comments. There are 15 companies in the same industry as Coin, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't really spend much in CapEx, only 11 million, which is fine. ICE spends the most, 639 million. They have a really good debt to equity ratio, 0.5. That means for every dollar of equity, 50 cents of debt. They're one of the 2 companies that do not pay a dividend in this industry. Look at market-wise, 8% dividend. Such a small market cap, 18 million. We could probably buy the stock. Me and all my subs, let's pool our money together. We could buy the company. They generate 1.5 billion of free cash flow, which is pretty close to the average. They rank 50 market cap. S&P Global is number 1 at 160 billion. All their price multiples are worse than the median average, so they do appear overvalued according to these ratios. They generate 5.2 billion of revenue. And their 5-year annual revenue growth rate is 0, so it looks like they're pretty much flat. Look how volatile the stock is. It's 52-week low, 92. It's 52-week high, 324. That's a spread of 72%. It's not as volatile as market-wise. That is a spread of 86%. If you put $10,000 into this company when they started trading, you would have been real sad for a couple of years. But it's coming back. It's almost back to where it started trading. So to summarize, I have them trading at a 32% premium, ranking 6 out of 10. Crypto is not going away, so I think the company will be around for a long time. I'm not sure if I will buy it short term, but long term, I probably would buy it. I think it'll definitely go up in price. Ratios are pretty weak. They're all worse than the median, 3 out of 10. Financials are pretty bad as well. Free cash flow down 61% since 2021. Revenue down 33% since 2021. Let's look at their 10Q. Here's their income statement. In the third quarter of 2023, revenue is 670 million. This year, it's 1.2 billion. So it's a really big improvement. Let's see if they give a breakdown of the revenue. Here's a really nice breakdown of their revenue. Of the 1.2 billion, transaction revenue is 570 million. That almost exactly doubled. Subscription, 556 million. That didn't double, but it's up quite a bit. Other revenue is interest, 77 million. Most of their transaction revenue is from consumers, 480 million. They take a small cut for each transaction. Institutional, 55 million. Then they have subscription revenue. Stablecoin is the biggest, 246 million. Then blockchain rewards, 155 million. Interest on the loans they provide, and custodial fees for holding the crypto, 31 million. Here's some more info on their stablecoin revenue. They derive stablecoin revenue with the issuer of USDC. USDC is built on the Ethereum blockchain and it's pegged to the US dollar, so it's always equal to $1. Their blockchain revenue is their proof of stake service. It's kind of like interest on your cash. The more crypto you own, the more you can stake it and the more you can earn from that crypto. and they earn interest on custodial funds held at third-party institutions. They also provide institutional loans to businesses. They talk about that down here, loans issued to institutional customers through prime financing. They earn custodial fee revenue based on the crypto assets they hold. Other revenue includes Coinbase One and licensing. Coinbase One is good for people who use the service a lot. It streamlines the buying and selling process. Most of their revenues in the US, $1 billion, international, $167 million. Let's look at this income statement. It has percentages. Below revenues are operating expenses. Transaction expenses, $172 million, that's 14% of their revenue. Their biggest expense is technology and development, $377 million. Sales and marketing is 14% of their revenue. G&A is 27% of their revenue. They give a full breakdown of their expenses. The $172 million of transaction expenses, most of that is blockchain rewards, $108 million. Payment processing, $30 million. Reversal losses, when they have to reverse a trade, $11 million. And mining fees, $1.8 million. Here's a breakdown of the technology and development. Payroll, $272 million. Website hosting is $61 million. Amortization, $26 million. Sales and marketing, payrolls, $40 million. Marketing programs, $48 million. USDC rewards, $62 million. Here's a breakdown of the G&A. $138 million in personnel, that's payroll. Customer support, $48 million. Professional services like accounting and legal, $46 million. So their total expenses, $1 billion, which is 86% of their revenue. Operating income, $170 million. So operating margins, 14%. That's not too bad. Last year, they had an operating loss of 12%. So net income, $76 million. Net profit margin, 6%. For the trailing 12 months, net income, $1.3 billion. Really high margins, 30%. Let's look at their balance sheet. Total assets, $290 billion. Current assets, $286 billion. Most of their assets are the crypto assets they hold, $270 billion. And that same exact number is in their liabilities because it's not their crypto they're holding. They keep a good amount of cash, $7.7 billion. They don't have too much debt, only $4.2 billion. Here's a breakdown of the $4.2 billion. $1.2 billion has a really low interest rate, below 1%. $1 billion, 3.5%, $1.2 billion, 0.5%. This is the rate on the actual note, but the effective rate is the real rate. The effective rate takes into account compounding. That's really the main difference. The more compounding periods, the higher the effective interest rate will be. Assets minus liabilities equals equity, $8.7 billion of equity. They raised $5.1 billion from selling their business. They profited $3.7 billion from running their business. We forgot to look at shares outstanding. That's on the bottom of the income statement. Their shares are going up. Last year, they had 237 million shares outstanding, now 249 million. But that's fine because now they have positive net income. Last year, with lower shares outstanding, they had negative net income. I'd rather have more shares outstanding with positive net income. Let's look at the statement of cash flows. This is for the trailing 9 months. So it starts with net income, $1.3 billion. Then you add back the non-cash items on the income statement. Stock-based compensation is the biggest, $700 million. So they actually generated $1.6 billion of cash flow. They did have negative net income last year, but they did generate over $900 million of cash flow. There was a big swing in a change in current assets. This year, a cash outflow of $300 million. Last year, a cash inflow of $500 million. That's an $800 million swing. That's why they're so different. In the investing section, you could see the amount of loans originated, $1.3 billion. They received $1.1 billion from those loans. They purchased $18 million of crypto assets. They sold $53 million of crypto assets. There's a lot going on in the financing section. They issued convertible notes and received $1.2 billion. If these notes convert to equity, that will dilute the shareholders. Let's look at simply Wall Street. Its last price, 306, 77 billion market cap, up 13% in the past week, up over 200% in the past year. I wish I put all my money in this stock. Here's the stock price since they started trading. It was in April 2021. It looks like it started trading over $300 a share. I don't know how that's possible, but that's what it says. It peaked in November 2021 at 350. It never got back up there again. And for a while, it was trading below 100, as low as $35. It's so obvious after the fact. Now we're like, why don't we just buy it? But when it's real low, you think it's going to go lower. People usually buy stocks. Most people buy stock at the worst time, when they're overvalued at the highest points. And most people sell stock or not buy stock at the best time when they're trading at all-time lows. I'm sure the stock will come back down at some point. Not sure if it ever come back down to $35, but it may come down to like $150. Simply Wall Street thinks the stock is really overvalued. They're at $102 a share. And this is their DCF, a really low WACC, 6.8%. And they're not predicting the future free cash flows on this one. They're doing a different type of model. They're using what you call the excess return model. This model is usually used when it's really hard to estimate future free cash flow. It's calculated based on the sum of capital invested in the company and the present value of excess returns they expect the company to receive in the future. It's a much simplified approach, but the results are questionable. 23 analysts priced this stock at $244, so they say it's slightly overvalued. Here's their revenue since 2019. It was $500 million, and the revenue goes up a lot when crypto goes up. It shot up to $7.8 billion. Then it came way down to $2.6 billion. Now it's coming back up. You generally don't see revenue that looks like this. Usually it goes up slightly each year, maybe a little dip. They didn't have any debt in 2020. They added $3.8 billion in 2021. Now they're at $4.5 billion. And their equity is always a little higher than their debt. Currently their equity is $8.8 billion, debt of $4.5 billion. So a good debt to equity ratio. And they have a ton of cash on their balance sheet. $7.7 billion of cash, enough to pay off all their debt. The CEO's salary is a cool $1 million for the past few years. Total compensation $4.7 million, tenure as CEO 12.5 years. In the past year, there's been a couple of insider sells, no buys. 46% of the company is owned by institutions, 35% by the general public, and 19% by insiders. The CEO is the biggest shareholder. He owns 14% of the company. His value is $11 billion. Then Vanguard, BlackRock. One of the co-founders owns 3.7%. Fidelity, the Japanese firm Nikko, 2.4%. Cathie Wood's ARK. You're not going to see Warren Buffett on this list. Mark Andreessen, the co-founder of Netscape, owns 0.5%. Do you remember the Netscape web browser? Netscape was a public company at one point. It became a subsidiary of AOL. Their employee count was 1,000 in 2020, up to 4,500 in 2022. Now it's 3,400. And the ticker trades on the Nasdaq, Wiener Börse, the Bern, Deutsche Börse, Zicha, Bulgaria, Borsa Italiana, Mexican Bolsa, Sao Paulo Bolsa, and the Buenos Aires Stock Exchange. If you click on the video in the top right corner, I'll show you how to build your own discounted cash flow model.